Thank you very much for joining me with this short presentation titled The Variables to Consider When Trading the JPY Basket or the Japanese Yen Basket. Now, before we get into the actual presentation, I'm going to bring up our disclaimers, give you a few seconds to read through them, and then we'll continue. Thank you very much. The Japanese Yen Basket. This is a new and innovative product exclusive to FXCM, and it is a benchmark designed to reflect the change of value in the Japanese yen. It is made up of 5 currency pairs: the Euro Japanese Yen, the Pound Japanese Yen, the US Dollar Japanese Yen, the Canadian Dollar Japanese Yen, and the Aussie or the Australian Dollar Japanese Yen. Now, right at the beginning, this provides a number of advantages that you need to know of. Firstly, it spreads a trader's risk around because it's a diversified basket. That means, of course, that the trader is not required to find the best pair. No more picking of the strongest versus the weakest. The trader can just use the JPY basket. Now, there are effectively 3 variables we're going to look at in this presentation when looking to trade the Japanese yen. And the first variable is the US dollar Japanese yen. Although it's only 20% of the basket, the US dollar Japanese yen is important to general Japanese yen analysis. This is because it is the second most traded currency pair in the world. So its direction generally leads the other JPY crosses. Also importantly, it has a decent price history for analysis. So take a look at this slide here. We can see that the green fast moving average is below the intermediate orange moving average, which is below the slow moving black moving average, and the RSI is below 50. So it seems to suggest perhaps that the US dollar is depreciating in value when compared with the Japanese yen. So that's potentially a good place to start with an analysis. The second variable is risk sentiment. Okay, the Japanese yen is regarded as a safe haven currency, and there's a few reasons for this. First of all, Japan has a current account surplus and is regarded as a net creditor. Also, the interest rates in Japan are extremely low. At the time of this recording, they're actually negative. And that means that there is incentive for Japanese investors to look for higher yielding assets offshore. This is called the carry trade. So what happens in a time of crisis? Capital will generally flow back to Japan en masse, and that has a net effect of generally pushing the Japanese yen higher. Moreover, because it is generally regarded as a safe haven currency in the market, it becomes a self-fulfilling prophecy. Take a look at our next slide. So in the top chart, we have the US dollar Japanese yen, which has a decent history. And in the bottom chart, we have the US 2000, which is a proxy for the Russell 2000, a small cap US index. And these small caps are very sensitive to risk on or risk off environments. And you can see that the Japanese yen in itself is highly correlated with the risk on and risk off as reflected in the US 2000. Variable 3 to consider is the chance of intervention. In this variable, we regard intervention by the central bank. Now, central bank intervention is extremely rare, but it does happen. And when it does happen, it affects volatility and prices tend to spike. Now, with regards to the Japanese economy, it relies heavily on exports. So if the Bank of Japan views that the Japanese yen is too high and is damaging to the export industry, it may intervene. So keep a lookout for comments by the Bank of Japan, or if there are relatively low levels of the US dollar to the Japanese yen. Take a look at our next slide. You can see that the US dollar is depreciating against the Japanese yen. That's the red arrow moving in a southeasterly direction. And of course, the RSI is below 50, which is on the bearish side of the indicator. However, on the 15th of September 2010, the Bank of Japan did intervene for the first time in 6 years after the US dollar hit a new low of 82.87 to the yen. And you can see there's a big spark up, and the RSI actually jumps from the bearish side of 50 to the bullish side of 50. So any traders that were looking to go short at that particular moment needed to know the rumors if there was going to be Bank of Japan intervention at that stage, because they certainly did come to fruition. Of course, if you are looking to trade the Japanese yen basket on the FXCM platform, you can see that in this slide, the Japanese yen basket is highlighted blue, and this is necessary to access its price and chart. So simply right-click on the Japanese yen basket and click on subscribe, and it will be highlighted blue and available to trade. The next slide actually shows the daily chart of the Japanese yen basket, and you can see in this particular chart, it's moving in a northeasterly direction, seeming to suggest an appreciation in the Japanese yen. Now, if one is looking to trade the Japanese yen basket on the FXCM platform, in this example, the trader is looking to buy 1 unit, and it is equating to a 91 US cents movement per pip. Okay, but you could also see that the trader needs to maintain a $440 margin to keep the trade running. And this is, of course, if the account is held in a US dollar account. I hope you found this short presentation helpful. That's where we're going to leave it for now. Thank you very much for joining me. Just before I sign off, if you're interested in trading the PYBasket, log in to your FXCM platform now, or if you don't have a live account, go to fxcm.com and open a live account.